Remember that when he saved the town from flooding by sticking his finger in a dike? Well, that story exemplified courage, selflessness, and how small actions can actually have significant impacts. Now, my next guest says that our dam looks fine until it starts to crack. So I want to bring in our Sound Plan Group Planning CEO, Dan Stryzewski, and David. I'm sorry, David. Everything's going well, but you are worried, right? You do see some worrying signals out there, some potential cracks in the dam, so to speak.
Yeah, absolutely. And to your point, like valuations by themselves don't crash the market. It's when we get the earnings that show up, or if we get some event. I think that we're probably going to see price changes, not necessarily earnings changes that could lead to some challenges. But Powell's right now just putting his fingers in different places, doing his best, because he's at risk right now of repeating the Arthur Burns mistake. You cut too soon, you reignite inflation. You cut too late, we destroy the economy.
But right now, many people are saying the economy is being destroyed from high rates. In other words, if you just look at it from aggregate data, this is the way I look at it.
Sure.
Aggregate data is awful because, and I tell everyone, you can have 9 bus drivers going to a bar, and then Elon Musk can go in after them, and the newspapers and the Fed would say 10 billionaires were at a bar last night. No, it was 9 bus drivers and 1 billionaire. And so higher rates seem to be like, I guess the thing I'm wondering is, should we be rethinking even rates in terms of vis-a-vis the average American?
Yeah.
Not necessarily the aggregate.
Yeah. Well, housing right now is at its most unaffordable place because of the rates.
Right.
And so the way I like to look at this is that for every 1% that rates rose, what we have is a 10% that less in our buying power, or we have to come up with a 10% more income. So with rates being at least 400% higher, 4% higher, then that means $1 million house is now $600,000 a day. That hurts the average family, but yet we're seeing the opposite with price appreciation because people have been coming in with cash that have been capitalized because of PPP loans and ERC, et cetera. And so some of that's cooling off right now, and I think with some of the immigration outflows, you're going to see more rentals that are going to be coming on the market.
The permits today were ugly.
Yeah.
I don't know, ironically, that helps in a sense. It can't help though, right? Because that's less supply in the future.
Yeah, well, permits were down, but so it's sort of like we're driving down the road with the fuel tank on, the lights on here, and we got a little bit of gas in the tank right now, and it's looking semi-okay. So yeah, we got some building that's taking place, but the future doesn't look like it's as strong.
Let's talk about the future with AI, because you say that the tangible part of the AI boom, the infrastructure part, copper, steel, silver, investors should be looking in those areas.
Yeah, so this is more of like the picks and shovels conversation, right? So if we talk about copper, this is electrifying things and bringing it together. Steel is going to build us those infrastructure, and silver ultimately connects semiconductors, connects electricity. If we need data centers, we want semis, you go small, you need more silver. So silver's the big winner.
Now, how do we play that? It's not, the average viewer. What's the best way for them to get exposure?
So if you go directly into silver right now, you're up 25% on the year. GDX, GDXJ right now, up about 60%.
Those are the miners.
That's right, the miners. So I like the miners. I think just even get an ETF, leverage someone else's expertise sounds like a great idea to lead the next 3, 5, and 10 years. But we're buying ounces right now for like less than $1 for what they're in the ground for. And so that is a massive windfall for those that are paying attention.
I got to ask you, 30 seconds left.
Sure.
You really like Tesla, it looks like to me.
Yeah.
And this is where we see the street completely bifurcated. Some people still love it. Humanoid robots, optimists. The others are saying it's extraordinarily expensive. It's going to start to lose in the EV space, particularly to rivals domestic and foreign. You're part of the group that thinks this really has a huge upside.
Absolutely. No one's being profitable right now in EVs except for Elon. And so you look at this organization, his position right. He's done the hard work. I think he's in a...
You think the rollout's going to be good? The robotaxis and everything, you feeling pretty good about that?
In the event it doesn't happen like right on track, it will happen. I mean, I have 2 Teslas, and I will tell you, I feel a lot more confident with the $100 I can pay for a professional chauffeur for the month.
Yeah,
that's what it costs.
Yeah.
$100.
I saw a story. It wasn't the Tesla, but I think it's some town, and maybe Houston, where people are ordering the cars, and if it's a human driver, they cancel them. Like everyone wants to get the Waymo, right?
Okay.
It's amazing because 10 years ago the question was, would people get in an autonomous car?
Yeah. Now
they're canceling human drivers because they can't wait to get in them. So that's a good sign.
That's a great sign.
Good stuff, my man.
I appreciate
it.
Thank you.